In today's weekly Forex forecast, we are discussing the DXY, the euro, the pound, the dollar versus the Swiss franc, and also gold as we head into a very significant week for the Forex market with that Fed rate decision on Wednesday. Plus, we have the monthly close coming up on Thursday, so just 24 hours after that. So I'll have all the details in today's video. Now, before we get started, guys, if you want my help with your trading, including real-time market updates, seeing my trades live, VIP-only videos every single week, also full access to the course all in Discord, so it's all real-time, be sure to check out the link in the description of this video for 85% off lifetime access. If you're on the website, click on that Join VIP link. Okay, so let's go ahead and jump right in, guys, with the DXY here, monthly time frame. And this is that 2011 channel that we've discussed now several times here. And you can see where we've got these lows back here. So 2011, these lows back here, right around 2021. And then you've also got this recent price action here in June and July. Now, the key factor for the DXY is that June technically closed below this mark. Okay, so if you look here, June was a very bearish close. It closed right there at the low. And so far this month, we have seen some relief. So we thought this was likely going into July. In fact, if you look at the videos or watch the videos, at the beginning of this month, I talked about the potential for a US dollar rally back here toward this area. Now, we have seen the DXY actually above 97.70, which is where this area comes in. So if you take a look here at the weekly, right, this is what it comes down to. Now, I know that there's a lot going on here, but it all makes sense. Trust me, I'll explain all of this and it will be very clear. So you can see that the lows back here, right, this was the bottom of that 2011 channel where the DXY held up. Now we got the close below, we had that June close below, and then we had weekly closes back above. So there are a few things happening right now with the DXY to where it's causing a lot of indecision out there in the markets. So on the one hand, you have the monthly holding below because July hasn't closed yet. It does close next week. And on the other, you have the weekly holding above this. And right now you can see, look where the DXY is trading right there at 97.70, right there at the level going into the weekly close. So the market isn't making this easy to really tell us, where the US dollar is going to go from here. And I think that this really kind of highlights the fact, guys, that markets are very indecisive right now. And we do have that Fed rate decision coming up next week along with the monthly close. Okay, so a few things to consider here. First of all, what I told VIP members here on Thursday. So this candle right here on Thursday. So let's look at the 4-hour time frame because this really shows it. You can see this area down here at 97.30, right? This was my decision to close my dollar Swiss franc short that I had on that I talked about last week. And I did close that for a decent profit, okay? So I did get out of that trade, and this right here was the reason why, because this reclaim, okay, going into the ECB, right? We talked about this here. This ended up closing above 97.30 going to the weekly close, or I'm sorry, the daily close. And this is what I told VIP members in Discord in real time, talking about the fact that this could initiate that 97.7 retest, which we're seeing here on Friday, okay? So this reclaim right here, this little, failed breakdown that we saw from the DXY was enough to trigger that 97.7 retest. So why sit in a trade if I'm in profit, right, and just watch the market come back to my entry or worse? So I decided to take profit on that dollar Swiss franc short. And I'm glad I did too because Friday did see the market come back there to my entry. But anyway, guys, looking at the DXY here, you can see, again, the market is just trading right around this area, not making it easy for us. And this is to be expected, right? Going into that Fed rate decision and the monthly close, you're going to get a lot of this, guys, between now and Wednesday. I don't think that markets are really going to decide convincingly one way or the other which way these markets are going to go until we hear from the Fed, until we hear from Powell and get, some more updates here. Okay, so it looks like this is where we're going to end the week, guys. Unfortunately, the market is just going to close right there in that key area that we've discussed. Again, not really telling us one way or the other which way this is going to go. Now, of course, you can see here from this view, like this gap back here, I think that this is pretty telling as far as where exactly this level is. You can also see these lows right here, right at 97.70. So if, this week closes below, technically this is still intact as resistance, okay? And you've also got this area down here from Thursday's candle that could get tested down there around 97.30. So maybe some ranging price action here from the US dollar going into that Fed rate decision. I think that's probably the most likely scenario because, again, I don't see markets really moving convincingly one way or the other until we get that Fed rate decision. And again, we also have that monthly close the day after the Fed rate decision that's also going to cause some challenging market conditions because if you're not aware, monthly closes tend to cause erratic price action, a lot of volatility out there in the markets as institutions close their books. And the fact that this upcoming one is a day after the Fed rate decision, I think it's going to be very volatile. All right. So moving on, guys, because again, we're not really getting much here from the DXY. It's just looking like it's going to close right there around 97.70. Although, like I said, technically still holding up as resistance for now. All right, looking at the Euro USD, right? We have the market just kind of chopping around here ever since back here in late June. And as you guys know, I was shorting this market back here in early July because I took it off now, but there was a channel back here, still is, okay? And the market actually finished June right there in that area. I shorted up here, took profit down here again, down around 116.30, all of which I shared in the VIP group. That's the benefit of being in Discord, guys. You are going to get access to my trades in real time, along with all of those trade setups throughout the day. I provide, at least about 5 to 10 different market updates throughout every single weekday. Now, looking at the euro, guys, we have the market still holding above this trend line from back here in March. Okay, so you can see several touches off of this key area, right? 2 here, 1 here, and 1 here recently. So this is a key factor here for the euro going into potentially the Fed rate decision next week and also that monthly close, right? So definitely something to keep an eye on, along with the fact that, if this were to become, and this is a big if, guys, if this were to become a lower high, and we get the pressure, the retest down here, that could be something to keep an eye on, okay? But then again, it could be something like this back here where we get, a lower high pushing into this level and the market just takes off once again. I think a lot of this is going to come down to the DXY, guys, and where the US dollar closes the month of July in relation to that 97.70 area, okay? So for now, pretty unfavorable conditions here for the euro. I mean, very sideways ever since the market reached this area around 117.50 on Tuesday. You can see just a lot of chop around this region. And again, this has to do with the fact that the DXY is also between 97.30 and 97.70 and not really giving us many clues as far as where it goes longer term. Okay, so just to reiterate, guys, I think that going into Wednesday's Fed rate decision, I think we're going to get a lot more ranging from these markets. And with that said, guys, I do want to point out too, this is, never financial advice on this channel, but I think that if you're a higher time frame swing trader, where you're typically targeting 200 or 300 pips, going into next week, I think that you might want to tighten things up a little bit. And instead of looking for 200 or 300 pips, you might want to shorten that up a little bit and look for maybe 100 pips or less on a trade if something sets up, right? And obviously being careful of Wednesday's Fed rate decision. And that way too, you're looking for, tighter ranges from markets and you can get out before that Fed rate decision, because I really think that holding a new trade going into that plus the monthly close is going to be very ill-advised, all right? So just be careful out there, guys. But again, ranging market here for the euro. Now, again, if the DXY does hold below 97.70, which you can see it's coming off a little bit here as I make this video, it's got this area down here around 97.30, which it reclaimed on Thursday. That's going to be support here for the DXY and for the euro. That probably equals a sweep maybe of these highs back here, but this is going to be your resistance pocket going into next week, right? Again, you've got this range that's set up here for the euro with really the mid-range kind of be that 117.50 area, okay? So not a whole lot, guys. The price action here recently over the past few days really has been pretty unfavorable. And like I always say too, I think that if you insist on trading later next week with that Fed rate decision and monthly close, you really got to look at the extremes, guys. And by that, I mean, if we're getting all of this through here and you're either looking at this up here or above, right? Or this down here. So essentially 117.90, 118, that area down there, or 116.60, right? Because the thing is, with Wednesday's Fed rate decision and that monthly close, you're likely to see a lot of volatility, right? So if we know that this is the current range here for the euro, right? Range highs, range lows, you've got this mid-range through here, very choppy through the mid-range. Then again, I think you want to be looking for, potential opportunities up here on a sweep of this high, or we get that move down here toward that trendline support down here in this area, okay? I mean, you could also look down here, of course, but again, I think with that volatility coming up on Wednesday, this right now, this range is so tight that we're probably going to see a sweep of the highs or lows. It just depends on what sets up going into that Wednesday event. Okay, so, as always, guys, if you want those real-time updates, be sure to join us in VIP Discord. Look at the pound. We've talked about this trend line here off of that 2025 low. You can see several touches off of this level down here in this area. And you can see where the pound really struggled here last week. Okay, so we got a bearish engulfing candle, and this is something that I mentioned in the VIP video that I put out on Thursday. So this right here, guys, is a bearish engulfing candle. Now, this by itself doesn't mean a lot. However, the fact that it occurred at this confluence of resistance up here, we talked about this here in that midweek outlook last week. And I mentioned this area around 135.75 as resistance. So the fact that this candle though occurred here at this confluence of resistance, and Friday now is confirming this, because a bearish engulfing candle like this, the same thing with a bullish engulfing, doesn't mean a lot on its own, because if the market were to just rally here on Friday and come back up here, right, then this is not really a bearish signal. However, the fact that Friday's session is now confirming this and potentially closing below this key level here, that could be significant for the pound, guys, going into the monthly close. Okay, so we'll have to wait and see because, again, the DXY is technically holding below that 97.70 area this week. Okay, so it's going to be very interesting, guys, to see what we get next week. But I have to stress the point that I think you've got to be really careful with these markets right now as we head into those events. Okay, now looking at this chart here, I'm sure that some people are seeing this where you've got the market, obviously, multi-month uptrend since the start of 2025. Now, here over the last couple of months, though, you can kind of see where we have the potential for a topping pattern. Okay, now I say potential because this is not confirmed. And furthermore, again, the DXY is still below 97.70, right? There's nothing there telling us that the US dollar is bullish on the higher timeframes. The monthly close, June closed below 97.7. Right now, the weekly, guys, is having trouble getting back above that. Okay, so there's nothing to confirm a bullish US dollar. So I really want to be clear here. However, if this were to set up, right, if this were to set up where we get the pound closing below here, right, convincingly going into that July close, then yeah, this could become a larger topping pattern. Okay, so I'm not going to go into too much detail on that or make any kind of speculative calls on that because we don't have confirmation of this, nor do we have any real confirmation here from the DXY until next week's events. Okay, so something to monitor though over the coming days in case we do get something that sets up there to confirm a top for the pound. Okay, so let's move along here, guys, to the dollar versus the Swiss franc. So I made a couple of videos on this one last week, and you can see here that pretty clear we have this descending channel from May. So we have several highs up here off of this level. We've got these lows down here going back to May. And you can see here that since the start of July, we saw the retest down here at the bottom of this channel, and we had this pair just carving higher highs and higher lows. However, like I mentioned last week, this always looked pretty corrective, right? You can see that we have the overall trend looking bearish. We had this move lower. We had the market moving against this move, this impulsive move back here. And so this breakdown on Tuesday did look pretty bearish here for this market. Now, I was shorting this, which again, I announced this in real time in Discord. Okay, so I was shorting this here on this breakdown. So you can see here on the 4-hour support through here, we got the breakdown, retest as new resistance. So I shared a short through this area in the VIP group. Obviously, we saw the market move lower within the first couple of hours of that, retesting this low down here. However, since that time, buyers have really been absorbing pretty much everything that sellers are throwing at it. However, this red box here, guys, this is the same area that I mentioned in last week's video as the one to watch, right? You've got all these lows back here, this entire pocket of consolidation. You've also got these lows through here. Another thing I shared in Discord, and again, this is the benefit, guys. I know I keep saying it, but it's the benefit of being in Discord, is that when the market was trading up here on Friday, right? What I said is that this area here, not only do we have these lows back here and these lows, but if you look at TPO, right, time price opportunity, and you look at the month of July, okay, so from back here at the start of July, this entire price action, if you pull up TPO, what you're going to notice, and it's probably changed a little bit now because it does move, it's a fluid indicator, but at the time when the market was back here, essentially this right here, right, because of this consolidation, this was the POC, the point of control, meaning that this was the highest volume point within this month, and furthermore was also the highest activity level for this pair right in this area here on Friday. Okay, and additionally, if that weren't enough, we also had the value area high, right, which signals the range highs of 70% of the trading activity for the month of July, also coming in right there in that area. There were many, many factors that were pointing to resistance here, and I talked about this in Discord. And I know a few members got short there. I was also shorting this. I decided to take profit a little bit ago just because I didn't want to hold this trade going into the weekend in case we do get a weekend gap. But I know several members caught that for a nice profit. So guys, for the dollar Swiss franc, really what this comes down to, right, is you've got resistance up here. Okay, so right around 79.70, 79.80. You've got this low down here as key support right around 79.18 if you want to get specific. And then below that, we have that July low around 78.72. Now, we still have the chance here or the opportunity that this market could be headed much lower down there toward that weekly support around 77.20 that we've talked about. Now, of course, you've also got the bottom of this channel here. But whether or not this plays out, guys, or we get the market just reversing higher is going to come down to what we get next week on that Fed rate decision and the monthly close going into July. Okay, so like a lot of the other stuff that we talked about here today, this is going to depend significantly on what happens here with the DXY. And like I mentioned last week too, guys, I do want to note that a lot of times when I start talking about the DXY when referring to the dollar Swiss franc, people say, well, the Swiss franc is only a very small percentage of the DXY. Why even pay attention to it? And like I showed last week, in fact, I'll just pull it up now, guys, might as well while we're here in this video and show you what I mean. So using the compare tool here in TradingView, what you're going to notice is that if I go ahead and reset this, let's see, reset this view, go out here, you can see that it's essentially the same chart, guys. I mean, so the DXY moves is very positively correlated with the dollar Swiss franc. So the point here is that, monitoring the DXY, seeing what's going on there, especially as we head into that July close, is going to matter for something like the dollar Swiss franc. Okay. So I just wanted to make that clear that yes, the DXY does move in tandem with this currency pair, despite the fact that the Swiss franc is a very small percentage of the weighting that goes into the DXY. Okay. So as you can see, again, this is the resistance area we talked about all week. You can see, very clearly that rejection here today, even a 4-hour bearish engulfing candle, which could be confirmed here on this next close. But again, it is Friday, so you've got to take it with a grain of salt. Plus, we have FOMC coming up. Okay, so looking at gold, guys, XAUUSD. So we've talked about this May trend line here several times on this channel. And right now, gold is once again testing this area as key support. Okay, so bounce back here, bounce through here. You can see a very well-defined trend line here going back to May. So in my opinion, as we go into next week, guys, what this is going to come down to for gold. All right, so some conflicting signals here for XAUUSD, and this is kind of across the board. It's not just gold. We're seeing a lot of this out there as we head into next week's events. Because even though you can say, okay, well, gold is coming off of support down here, right? This means that it's bullish, right? However, at the same time, if the market were to close right where it is now, the issue here is that, a few things. First of all, this would be the most bearish close on a retest that we've seen. Because what you'll notice is that back here, right, this retest here, the market bounced right away on that candle. Same thing over here, same thing over here, right? The market bounced significantly off of this level. And now, yes, it's holding just above it, but it's really struggling, right? Sellers have been in control all week. And so far, this is a pretty weak looking bounce. So that's the first factor. The second factor is that you have gold holding below now 33.70. Okay, so this was the open gap that we talked about back here. This was actually a target of ours on this move. So in VIP, I mentioned a trade that originated down here in this area, and this was our target. Now, this gap closed up here. However, you can see that this is definitely a critical level here for gold. If we look at it on the 4-hour time frame, you can even see this even better here with 33.70, right? You had this open gap from back here in June. It was nearly tested here, tested through here, became resistance again, and we got the breakout. And then look what happened here this week, right? Resistance through here. So again, even if gold closes above here and holds above that May trend line going into the weekly close, the issue here is that, first of all, it's a pretty weak looking bounce so far. That could change, but we only have a few hours left here in Friday, so I doubt that we get a significant bounce. And you've also got 33.70 that the market is now closing below, okay? So, a few things to consider going into next week, all right? So the jury is out, guys. The jury is out on gold right now, at least in my opinion, on where we go here. I mean, yes, the uptrend is intact. However, like I've said recently, right, the longer term uptrend is intact, but for the most part, this has just been a sideways market. So here's what I'll say. If we get the confirmed breakdown next week, okay, so if gold holds on here or thereabouts and we get a confirmed breakdown next week, you've got this single print or imbalance up here off of that low from Thursday, right around 33.51. That could become a factor. That could be resistance. You've also got 33.70. Now, if gold can get back above both of these and we see the US dollar, start to sell off, gold gets back up here, you've got a single print up here as well from this drop, okay? So a few things to consider again, but for now, guys, for me, the jury is out here on where we go. This is kind of a wait and see market. One thing that I will note though, if we do get a breakdown, okay, it's big if, but if the US dollar can rally, because we know that the US dollar and gold tend to be inversely correlated, if the US dollar does rally into the close in July, obviously a big if, guys. But if that happens, then you're looking at, or I'm looking at, this trend line from 2024 on gold, which we've discussed before, but you can see where we have the lows down here, we have this retest down here. These were both yearly lows. And gold has not been back to this since the start of 2025. Now, it doesn't mean that it will return to it anytime soon, okay? It could take months for this to happen. But if we were to get gold breaking down, the US dollar breaking higher, then this area down here could become a target. Okay, you've got this unfinished auction back here from this low. this is essentially just one big range here for gold, right? And you can see where this area comes in there in early August. Okay, so I'm not saying that this will happen, guys. I want to be very clear there, because again, technically the market is holding right there at that May trend line. Okay, but if gold does break down, then that could be an area over the coming weeks that does get targeted. Okay, and obviously the bullish side here for gold, like I said, would be if the market can hold above this May trend line down here and then also reclaim 33.70 next week. I think if it can do that, then this starts to look, a little bit more bullish for gold up there towards some of these key levels. But like I said, the jury is out, guys, right now for me. So this is a wait and see market. However, I will be sure to update members in Discord next week. All right, guys, so that's it for today's video. Once again, be really careful with next week's events, both the Fed rate decision on Wednesday and also that July close on Thursday. If you want to join us in VIP, be sure to check out the link in the description of this video, or if you're on the website, click on that Join VIP link. Have a great weekend, and I will talk to you again on Monday.